Hi, I'm Jared Nelson from the Investing Channel, and welcome to Markets and Minds, the show where we break down big macro themes into simplified trade ideas. We are a few days away from the start of Q1 2021 earnings season, the first chance to see how U.S. companies have been performing in the new year, and perhaps more importantly, how they view their prospects over the next 9 months. That's a period that will hopefully see an end to the pandemic and a full-scale reopening of the U.S. economy. Ahead of each quarterly earnings season, Wall Street analysts are busy updating their models and forecasts, trying to work out exactly how U.S. businesses have performed over the last 3 months, looking for winners and losers among the various sectors, industries, and companies. For Q1 this year, the omens appear to be good. At the end of December, S&P 500 earnings were expected to grow by 15.8% over the first quarter of 2021, according to the consensus among Wall Street analysts. However, since the start of the year, the analysts have become more bullish, and they are now forecasting earnings growth among the S&P 500 stocks of 23.8%, up by more than 50% compared to their own forecasts as of the end of December. Over the first 3 months of 2021, the S&P itself has risen by 7% and has moved above 4,000 points for the first time. So, the question that investors must ask themselves now is just how much of the good news is in the price already. Perhaps we can get a clue about that from what S&P 500 companies have already said. Well, guidance has been pretty thin on the ground during the pandemic, but just under 20% of the index constituents have issued guidance for Q1, and roughly 2/3 of these were positive about their earnings outlook over the quarter. And though earnings season doesn't officially get going until the middle of April, in truth, 16 S&P 500 stocks have already reported Q1 2021 earnings. Once again, the omens are very positive. 14 of these companies posted a positive earnings surprise or beat, whilst 13 of them also managed to beat on their revenues as well. In fact, it's fair to say that analysts have rarely been this positive about the earnings potential of the S&P 500 stocks, and we haven't seen as big a rise in earnings forecast as we have this quarter since at least 2004, as we can see in the chart. For most of the last 16 years, analysts have tended to err on the side of caution and have cut their earnings forecasts for the S&P 500 stocks for most quarters over that 16-year period. So their current and very bullish stance really stands out. Where should investors look for winners in earnings season? If we examine things from a sector perspective, we find that 7 out of 11 S&P 500 sectors are expected to see an increase in earnings. And in 6 of these sectors, the increase in earnings is forecast to rise faster than the 5-year average earnings growth for that sector. 2 of these sectors saw their earnings forecast grow at the fastest rate since the data was first recorded almost 20 years ago. Energy and information technology are expected to be the star performers during this Q1 earnings season. The energy sector received the biggest boost to its earnings forecast, which rose by an astonishing 123.4% from $1.14 per share to $2.55. The previous biggest leap in earnings per share forecast had been 46.8%. Energy stocks, of course, have been riding a wave of optimism over the last quarter, and the S&P 500 sector is up by more than 32% year to date. The information technology stocks received a respectable 9% upgrade to its earnings forecast, which rose to $20.15 per share from $18.48 previously. That was also the biggest quarter-on-quarter earnings estimate upgrade for the sector since records began. Interestingly, however, information technology stocks have struggled in 2021 and have posted gains of just 3.9% year to date. Overall, then, there is a lot of expectation baked into Q1 2021 earnings, particularly in the energy sector, which has already undergone significant gains, whilst technology stocks, although forecasted to have good earnings, haven't outperformed in 2021 so far. On that basis alone, might it be easy for the energy sector and its stocks to disappoint the market, and by contrast, for the information technology sector to show that it's been unjustly undervalued over the last 3 months? Trackstar IQ, our search tracking database, has highlighted searches among institutional traders for information on technology-related ETFs in recent days. These include QQQ, the Invesco NASDAQ 100 Index Tracker, and ARK Innovation Trust, ticker ARKK. There were a total of 414 searches for information on the two ETFs from a combined 334 Wall Street professionals who may be thinking along the same lines as us. That's all we have time for this week, but as usual, make sure you do your due diligence before making any investment decisions. To find out more about our Trackstar IQ data, sign up to our free newsletter at investingchannel.com/Trackstar.